Hi, it's Nero here from Investment Rise, and here we are at the start of April 2022, and the headlines are all screaming right now, property prices drop, and it seems like people are starting to lose their minds. Is the property market going to crash? What's going to happen? So today my aim is to separate the hype from the data and actually share with you exactly what's happening around the property market, and more importantly, what it means to you as a property investor, especially if you're someone who maybe has missed out on the boom over the last few years and wants to try and catch up, or if you're someone who wants to maybe buy your own home in Sydney or Melbourne and you don't think you can afford it right now. How can you maybe catch up? Okay, so there's going to be some really important data that I'm about to share with you, and then, as I said, I'll share with you how to use that data to formulate a strategy for yourself. Price falls will speed up after Sydney, Melbourne peak. This is from the Australian Financial Review, and it says Sydney's property values fell 0.2% in March, notching the second consecutive month of negative growth. Now, mind you, the previous month, Sydney property prices fell 0.4%. So March's price fall is actually less than February's price fall. And so over 2 months, we're talking about a grand price decrease across Sydney of 0.6%. Okay, it's nothing huge, and you need to really kind of remember that when you're trying to separate the data from the headlines when you're trying to make investment decisions. Okay, but let's move on. And then the article goes into Melbourne. It says, while Melbourne prices dipped 0.1%, signaling the start of the broader downturn in these markets, the CoreLogic Home Value Index shows. CoreLogic's research director, Tim Lawless, said price falls in Sydney and Melbourne were likely to accelerate in the months ahead after hitting their peaks. Sydney prices peaked in January and Melbourne in February, so they're already entering the first part of the downward phase into negative growth, probably earlier than what I would have expected, he said. We haven't seen the same consecutive monthly decline in Melbourne, but the trend is looking virtually the same. It looks like the market pretty much flattened out in December and has been tracking along that bottom since that time. I expect price falls will speed up in these markets as the downward pressure mounts, but we're not expecting the market to suddenly crash over the medium term. So that's all well and good. You know, it's talking about someone's opinion and everything, and it's really focusing on Sydney and Melbourne. Okay, and yes, as I said in the past, that's where obviously most of Australians live, and so a lot of the media articles focus on what's happening in Sydney and Melbourne, right? That's what takes up the headlines. But as an investor, you're not limited to buying in Sydney and Melbourne. In fact, if you've been following my work for any length of time, you'll know that I've been saying probably time to avoid Sydney and Melbourne, and I've been saying that for a little while now, okay? But what I want to now do is go through some data, looking at the country as a whole, breaking down market by market, at least at a high level, to give you a sense of what's happening and how you can take advantage of the changing market conditions. So here we have the change in dwelling values from CoreLogic and the Financial Review. And I really like what has been done here, okay? And I'll explain why in a moment. So let's look at Brisbane, all right? In the past month, dwelling values. Now this, when it says dwelling values, it is not separating houses from units. It's putting everything together in a lump sum, okay? Now, as you know that I am someone who definitely favors houses over units. I think that when you look at the capital growth between the two, house price growth has far outperformed apartment price growth, and you can even look at individual suburbs across almost any capital city, and there will be multiple suburbs there where houses have increased significantly in price over the last little while, but apartment prices are still probably as low, if not lower than where they were 5 years ago. All right, so we want to be focusing on houses. At least this chart gives us an idea of what's happening around the country. And so when we look at Brisbane, we can see dwelling values increased by 2% in the last month, 6.4% over the last 3 months, and 29.3% over the last 12 months, okay? And you can clearly see here that it is the winner. Brisbane has had the highest capital growth over the last 12 months, but more importantly, it's still the fastest growing market right now as well, okay? And that is going to matter when you're looking at where to invest, all right? Adelaide coming in second place, past month 1.9% capital growth, last 3 months 5.7%, and the past 12 months 26.3%. Okay, Perth 1% in the last month, and then I'll just skip to the last 12 months. It's had 7% growth. Okay, so it is by far and away the worst performer of the capital cities. Now, I know that if you're looking at Perth and maybe you're speaking to a lot of real estate agents, they will tell you the market is really hot right now. Okay, because by Perth standards, it is. And I mean no disrespect by that. What I am saying is that the last sort of 12 months or so has been the first time that Perth has had almost any capital growth since about 2014. Okay, and in many suburbs since about 2011. So there's a lot of excitement there. But as an investor, you need to look at the country as a whole and determine if Perth is the right place for you to invest in. Okay, now of course, you might think that Perth is about to explode, and that's great, but you need to really be clear on what are the key growth drivers there that you believe will support your decision to invest in Perth. Okay, I personally think there are still some questions that need to be answered about the Perth market, and that's why I think we're not yet seeing that massive capital growth compared to the rest of the country. All right, but moving on, Canberra, 1% in the last month growth, 21.6%. Okay, Darwin, 0.8% growth for the last month, but the last 12 months, 10.6%. Hobart, 0.3 for the last month, and last 12 months, 22.3%. Melbourne, last month dropped all of 0.1%. In the last 3 months, it's grown 0.1%. Okay, I think it was a fall of 0.2%, then an increase, and then a drop. So it's roughly not doing anything. That's probably the easiest way to look at it over the last 3 months. Okay, but now look at the growth over the last 12 months for Melbourne. It's only been 9.8%. You'd have done better if you bought in Darwin, assuming you're buying in a medium-priced suburb and a medium-priced property. Okay, so Melbourne again. Local agents will tell you the market is growing. I know a lot of people who live in Melbourne say, oh, look, the market is growing so much. You've got to compare it to everywhere else. And when you realize that, when you're looking from an investment perspective, you realize that, look, Melbourne probably isn't the right place to invest in. And then when you consider the fact that Melbourne still has one of the lowest rental returns across the country, you're really compromising on capital growth at the moment, and your rental returns are horrible, which means your cash flow is going to be compromised as well. So definitely when you're looking at it from a nationwide perspective, and as a property investment advisor, we recommend you look at the country as a whole to work out the best places to invest in. Melbourne has a few questions again to be asked. Okay, then let's look at Sydney. Now, I want to spend some time here on Sydney because Sydney over the last month has dropped 0.2%, okay? Not exactly massive, all right? But over the last 3 months, it's grown 0.3%, okay? Which, again, is essentially zero in my book, so we've got a flat market, all right? But now, look what that means for the last 12 months of growth. It's 17.7%. Now, if you're being advised maybe by friends or family or someone you know about where to invest in property if you're looking to buy in property, you might be hearing that you need to invest in Sydney. Look how much prices have grown. Okay, but remember how much prices have grown it should have no bearing on your decision to invest, because past capital growth is no indicator necessarily of future performance. And how much a suburb has grown is great, but you don't get that capital growth because you weren't in that suburb at that particular time. Okay, just recently I was speaking to a client who said, oh, Nero, I bought a property in Sydney in 2018 and it's grown 50% or something by now. And so what I'm going to do is I'm going to buy a property in the same suburb nearby because it's grown so much. That was his only criteria. It has grown so much. And I hear this and I see this constantly, and I'm often left like kind of scratching my head because it's like, the market has grown so much. That wasn't your capital growth. What you want to do is buy an area that's going to grow so much, right? Will it grow? What are the key growth drivers? What's the supply and demand metrics? These are the things you need to be looking at, okay? So if you're thinking about buying an investment property and you're basing it on how much an area has grown in value already, I'd strongly suggest that's the wrong way to look at it. What you want to be looking at is, well, what's happening in the market right now? And that's why I really like how this chart has been done by CoreLogic, because it tells you what's happening in the past month compared to the past 12 months. Okay, so we go back up to Brisbane right now. It's been the best performer for the last 12 months, but it's also the best performer right now. which means that if you're someone trying to work out where should I invest and have you missed out or not, you'd be looking at areas like Brisbane or Adelaide potentially. Okay, again, this isn't advice, right? I'm not telling you necessarily just go blindly and buy anything here, right? This is just based on the data that I'm seeing and my opinion, okay, based on now my 20 years of personal investing experience. I bought properties all around the country and my last 12 years of helping people invest in property, okay? So, but I don't know your personal situation, so please don't take this as advice, but you need to start looking at the data, okay? And so you need to look at what's happening right now, okay? Not just what's happened in the past 12 months. And that's where I think if you look at this chart, you can see here that Sydney at the moment is, from a capital growth perspective, dare I say, it's a bit of a basket case, right? And, for those of us who have been investing or looking at the property market for less than 10 years, this will come as a surprise, because over the last 10 years, essentially, Sydney has been, if not the best, among the best from a capital growth performance, okay? It's been one of the best areas to invest in where prices have risen the most, okay? But for me, having invested now for 20 years, I remember a time when nobody wanted to invest in Sydney, okay? Because prices were not rising at the time. It was really a basket case for capital growth. People who bought in Sydney were just losing money, especially people who bought in apartments, okay? So remember, the market moves in cycles, okay? But if you look now at below Sydney, what we have here is nationally. And nationally over the last month, prices have risen 0.7%, okay? But 18.2% for the last 12 months. But combined regionals for the last month have risen 1.7%, okay? And over the last 12 months, 24.5%. Okay, and this is combined regional. So, you need to look at individual regional areas. But what should you take away from this data? What you want to take away is that if you're someone who's looking to invest in property for capital growth, there are still some great opportunities out there, but you need to look outside of Sydney and Melbourne, okay? If you're someone who has maybe missed the Sydney boom, the Melbourne boom, and you're like, have I missed out? No, this should give you a lot of reassurance that now is your time to catch up, because you've had some opportunities in the past, sure, but it's never been clearer the fact that Sydney and Melbourne are not the best performers from a capital growth perspective, and you want to look elsewhere around the country, okay? Or as one of my clients is, they want to buy their own home in Sydney, they can't afford it, and what they're doing is they're investing in other markets, and we're helping them invest in other markets around the country, which are almost certainly going to get them superior capital growth so they can catch up and come back and buy their own home. Okay, so for you, if you're an investor, this should be a very exciting time for you, because you haven't actually missed out, right? So almost stop believing the headlines, and I've said this countless times, and I'll probably keep saying it in future episodes as well, but focus on data. All right, you can't just buy a property in an area that you think you know because you're familiar with it, because you know some of the lifestyle amenities. That's not going to mean a lot. Right? You're going to have to focus on some key data metrics. You're going to have to really get some professional help or do some due diligence. And someone like ourselves, yes, we're property investment advisors, we're buyer's agents, we can help you with that. But if not, at least make sure that you are basing your investment decisions on data, because if you do, I am very confident that you're going to find some opportunities with some great potential for growth and good, strong rental returns in 2022. Hi, it's Nero here again, and thanks so much for watching. If you like what you saw and you're looking for a proven recipe, a blueprint on how to build a property portfolio that gives you passive income, then click the link below this video and get a copy of my book, Wake Up Wealthier, How to Build a Property Portfolio That Pays You an Income Each and Every Month. Okay, when you click the link and you download your book, you can get both the digital version and the audio version in case you don't like reading. All right, so I used to sell this book for $49, but right now I'm making it totally free. Why? Because I want more people to get this information, and I know that a segment of you will then like what you see in the book and choose to reach out to find out more about our services. But even if you don't, if you're serious about building a property portfolio that pays your passive income, then you really want to get my book, Wake Up Wealthier. It contains the secrets that I have fine-tuned over the last 19 years. It's totally free for a limited time. Click the link below.